Thank you. Thank you so much, Lauren. Thank you, Talking Galleries. Thank you, Alan. It's a real pleasure to be here, not just IRL, but NYC. So thank you very much for having me. Art Finance Debunked. It's a very different panel from what you've just heard. But when I first left the world of finance to join the world of art, I was pretty sure that art couldn't be taken that seriously as an investment or as an asset. Unlike property or shares or even wine, one reason behind my thinking was that there wasn't a sound enough system to borrow against art. Fast forward 20 years, and we now have an increasingly sophisticated and seemingly booming art lending industry. But galleries and gallerists are still understandably nervous of debt and opening themselves up to outside investment. That actually came up this morning. Or perhaps simply don't understand what it is they can access. All the brilliant people I have in front of me are hoping to prove otherwise and explain otherwise. I'm absolutely delighted to introduce short bios. I feel very bad because Lauren just gave me a beautiful bio, but you've got the full bios in your program. But to my far left, Noah Horowitz, who I have known for years, but most recently as head of Americas for Art Basel, but is now worldwide head of gallery and private dealer services for Sotheby's. Thanks, Noah. Next to him is Suzanne Gyorgy, the queen of art finance. She's managing director and head of Citibank Private Art Advisory and Finance in New York, and you started at Citi in 2000. There you go, the queen. And then just next to me is Jan Prasens, the deputy chairman of the Fine Art Group. Again, I've known Jan a long time. He was previously at Sotheby's Financial Services, which you built up, really, didn't you? And now, yes, is at the Fine Art Group here.
Thank you.
First things first, I think we need to know what we're talking about and what you all do. So, Suzanne, can I start with you as a bank? You all lend against art, but how do you go about it?
Well, that's a nice broad question. So I'll give a little background. I started my career in museums, and so when I joined Citi, I really didn't know what art lending was. I have to be honest. Why they hired me, I don't know.
You didn't mention that at interview.
Yeah, I don't know what happened, but I mean, I came from the world where one museum lent to another museum, a collector lent to an exhibition. And suddenly, I'm thrown in this world where people are using their personal art collections as collateral for loans. And you know, because I'm new to the banking industry, I didn't really understand why people were doing it. And it sort of seemed like maybe that's the last resort. Like you've leveraged everything and now you have to leverage your art. But what I came to realize is that top collectors, entrepreneurial people, know how to use leverage to grow their businesses. And a lot of people have very, important, meaningful art collections hanging on their walls that have increased in value. So an art loan is this perfect vehicle to open up liquidity from the art that's hanging on your walls.
But given all we know about art and how tricky it can be to value, you don't lend 100%.
No.
What do you? How do you? Is it normally half the value?
Yes. So with the Citi Art Advisory Lending, we do the valuations in-house. We have a team of art advisors doing the valuations. Sometimes we go to our good friends at Sotheby if it's out of our area, and then the loan to value is 50%. So, and banks have a lot of risk managers, and they don't understand art. And they become very nervous about art. But it turns out that 50% gives them the buffer they feel very, very comfortable with.
It seems about right. And then I'm going to talk numbers again. I know you don't want me to, but you're not going to lend against anything.
No.
And you don't. And how do you structure I mean, is it over how many years? What is it, interest? What's it approximately going to
So in our program, we're looking at works of art that have a minimum unit value of $200,000. And our minimum loan is $5 million. So we're in the private banks who are dealing with ultra high net worth people. And the typical loans are 1, 2, or 3 years. Sometimes they go out to 5. But the reality is it's relationship business for us. So we've had people with loans with us for 25 years. So it's just part of how they deal with uneven cash flow and how they fund their businesses or lifestyle.
Thank you. And I want to get a slight sense of what's different about what you do compared to Noah and Jan, and then what's different. But I know what you take as collateral is different, isn't it? You are not lending against a collection of art by itself.
So we're looking at a minimum of 4 pieces of art for the loan. And what makes us, like the private banks in general, different from other lenders is the art is the collateral, but we're also looking at the financial strength of the client. So we're looking at their overall net worth, cash flow, et cetera. My team's not doing that because we would be terrible at it, but they're credit teams that look at that. And we have a personal guarantee from the client. So we don't want, if the loan doesn't perform well, we don't want the first way out of the loan to be selling art. We want the client to be able to retain their collection. So they're looking at their financial strength first. But the collateral is the art. There's just the personal guarantee.
And then, so Jan and Noah, I mean, Jan, certainly we call you a specialist lender, I suppose Sotheby's as well, or a boutique lender. What does that mean in relation to what Suzanne has described?
Yes, I think in many ways we have a lot of the things in common and a lot of the things, we sort of sit on the other end of the spectrum. So my training came from, I'm originally a finance guy, but came to auction house, didn't know anything about art, and so I learned the hard way on that side. But my training was a little different. We obviously, at the auction house, didn't have the ability to analyze the creditworthiness of a client, think about sort of the bigger picture. It really the art lending evolved slightly differently. It was it actually evolved around estates. So when major collector passed away, the taxes are due actually fairly quickly.
So you would lend money before.
So the first innovation in this space was really what's referred today in advance, and it's still being used by the auction houses. But in that, while making advance, while the terms may be very similar in terms of 50% on the value of the property, I think where things differ is that the focus is purely in our world focused only on the art. So, and the reason is twofold. One is we are not bankers, so as such you don't want to be smart about something that you can't be. But we know about the art. So in my prior role and also with Fine Art Group, which is actually an advisory service, and we have around 60 people globally whose job is to understand art market and understand different parts of it. We determine our own valuation and really look potentially in the worst case situation, we look at the art as the only collateral that we have. So while we know our clients are usually very wealthy and they have other assets, for the sake of expediency of the surveys and being able to provide a loan very quickly, our focus is purely on the art. That's where we focus our due diligence, and I have to assume that that's going to be the sufficient security for our loan.
And is it fair to guess that maybe you can be a bit quicker with your decision than Suzanne, but you probably charge a little more?
Yes.
Okay.
There was always a price for that, but not just that. And we're not a bank. We don't take deposits from individuals. So it's a slightly different concept. And the good news is that we all represent sort of different parts of the market, and we coexist. And I think the important thing is that you have at this table, you have people who've been in the marketplace for a very long time, serving clients in different needs. Sometimes, we actually meet on the same client. Because, especially as we're going to talk about galleries, there's not just one thing, one size fits all kind of a solution. You really you can coexist within the same structure of the capital structure of the gallery, let's say, together.
And do you lend at slightly lower? I mean, doing the maths, your 5 million means you need 10 million of art to begin with. Right. Would you lend at a lower?
Yes. We generally, again, I think the scale is important. The bigger the loan, easier it gets, sort of economically we can provide the best terms, but we drop down to at least, I would say $500,000. And again, the sweet spot is sort of, 2, 5, 10 and higher, obviously. But we tend to sort of serve that other part of the market as well.
Thank you. And no, I suppose you've touched a bit on where it came from at Sotheby's, but what is it that is your primary client one who is going to sell some art at a later stage down the line through Sotheby's? Does it make a difference being...
Yeah, can I say something?
Yes, of course. That's why you're here.
Yeah. It's like... I'd like to thank I was at the first Talking Galleries in 2011. Yeah. Yeah, exactly. So thanks. This is so cool to be here again in New York. So thanks to Lucia and his team for doing this. Now I'll answer your question. I wanted to get that in there because if I don't say things like that, I forget and then I feel like a jerk. Sotheby's, I would, Jan ran basically our business for a long time. So what I can, really talk to is sort of how we work now, maybe, which has changed a little bit. When the business was taken private a few years ago, 3 years ago now, part of what was done was actually splitting out the financial services business from the core business. So they sit as two separate entities now. And so we now have, what historically was a business that was sort of a business more directly focused around the core auction business of the house. As that business itself has grown and morphed and changed over time, we now have the ability with Alex Klaben, who came in as a minority investor, as a finance guy, very sophisticated, thoughtful guy, and I think he really saw a situation in which the financial services business at Sotheby's could exist both to complement the core auction business, as it historically has, but also to grow and to start originating loans and lending with a universe of clients that needn't necessarily have any transactional history or ongoing business with the house. And so that's kind of where I slip in. And as my own remit with Sotheby's was getting constructed around what we could do with galleries and dealers more broadly, something that I've seen for many years, both in the academic side of our world and then also at Basel and the Armory show before, is just all the cash flow crunch and the challenges that galleries and dealers get in with high overhead costs, artists needing funding, galleries on a whole, both small, medium, and large, that are trying to be more engaged in the secondary market, their own artists, going after estates and bringing in artists that they hadn't previously worked with. And so there's a universe of things that galleries and dealers need, and a universe of clients that both Suzanne and Jan serve now, that was out there that we felt we could do things with. And so in terms of what I'm building specifically, it's sort of a modified version of what we offer to general clients, but calibrated really to the needs of galleries and dealers. And so we started around the same levels as the fine art group does, like right around $500,000, $1 million as far as loan origination. Most of our loans are 1, 2, 3 years. And we can move quickly because we can value things in-house. And if need be, we can sell those things. Hopefully we don't have to. But our loans are set uniquely against the art. So there's no other encumbrances around it except our ability to take that in and sell it if we had to.
And one thing I forgot to ask, actually, I don't know if it's the same for all of you, but if you have a piece of work of art that has a loan against it, can your clients keep it in their homes or private museums, or does it tend to have to go to storage and so on and so forth?
With our program, if it's in the United States, Canada, and happily more and more London, it can stay on the walls, but the rest of the world, it needs to go in storage. And that's really because of the laws country to country about perfecting movable collateral.
Okay, and are you similar?
Yeah, it's pretty much the same. I mean, we obviously a little more focused on the art, and because that's the true collateral for us, but definitely in the US and Canada and somewhat in the UK. But then again, this, I think, as the legal environment evolves in other places, we obviously will do the same thing. But for now, it's mostly US.
But we're hopeful.
Yeah, we've been hopeful for 20 years. Yeah.
And then I will get on to galleries and application to galleries and dealers, but you mentioned Alex Claiborne, and I read something where he predicted that this market could be worth $400 billion in the future. And Suzanne, can you measure, how big is the art loan? I see different, and I've seen 19 billion, 400 billion, and everything else in between. Can you measure the size of the art loan industry?
You know, I hate to say it, I really can't. If you're, I would say all three of us, we're careful the clients we work with, right? So, and in a private bank, everyone needs to go through this know your client process. Mm-hmm. And so we're highly regulated. And the regulators, when they hear that there's art involved, are all over it because they're so bored of everything else that the art seems really interesting to them. So we're audited all the time. So, I think that when people, I'm going to use the word fantasize about the size of the overall market, it's not necessarily business that you want to do.
Oh, fair enough.
I think a lot of those projections come out of the sort of very simple premise, which is if you look at the real estate and how debt penetrated the real estate versus art market, you see that it's really minuscule.
Okay.
So when you think about it, we all buy houses and everybody takes on a mortgage.
Yes.
There's nothing wrong about it. Nobody feels bad about it. It's a super efficient thing, especially in the US when it comes to taxes. So if you take that and you think, okay, I can do the same thing with the art market,
yes.
Obviously, trillions of value. And then as Susan said,
Trillions
Suzanne
now.
said, trillions of value. As Susan said, in many ways, there's different aspirations within the art market. Not everybody is looking as an investment. Not everybody wants to leverage it. It's just not for everybody. Right. So clearly, I think there is definitely room to grow, and especially when we look at it globally, I think the U.S. is relatively efficient, but there's definitely a way to go.
Yeah, fair enough. Yeah, no.
I was just going to bring that down to earth. Huh?
Okay.
Some
of the trillions.
What does that mean? Like the addressable market is the overall universe of art objects around the world, right? And I think that the number that you're backing out is basically like our calculation of what, knowing the overall size of loans that banks and the auction houses and niche providers have is somewhere around $20 billion, I think, give or take, and that's around 5% of the overall addressable market of art that's out there that could be ultimately wrapped in.
And that's if people are telling the truth.
Right, and that's what people,
always fun in this market.
So what is that number? Like that number is no more or less real than saying the market last year was $65 billion.
Yes.
Right.
It's all coming from a similar calculus.
Yes. But then how am I right in thinking this market is growing?
Yes.
How are you measuring that?
I mean, where we're seeing growth is, in the United States, people have been doing art loans for years and years very quietly. And I guess all around the world, there are different ways people are getting liquidity from their collections. But we're seeing tremendous growth in Asia, and also actually through Europe, because Europe traditionally, it was viewed as a last resort. Like it was kind of an embarrassment, I think, to leverage your collection. But now we're really seeing, it's really caught on, and people in the financial sector, collectors, understand how it can work for them and for the businesses. So
and
we're
is it
seeing a lot of
younger?
growth
Is it
there.
younger? Are you seeing younger clients?
Yeah.
Yeah. I mean, I think what really happened over the years is the fact that obviously all these assets have gone up in value. A lot of people bought these objects purely just to hang them on a wall and never thought about them as an asset. And as the time evolved, it just became so much bigger portion of their overall assets, and you just can't ignore it. So I think you're seeing that, and I think the new generation obviously maybe has more appetite to lever this asset and so forth. But I learned that there's no one size fits all. I mean, as you go geographically, I think tendencies change. People in Europe are a little bit more, I'm from Europe originally, so a little more reticent to borrow, but then you find some that borrow every single dime out of their collection. So it really varies, and I think that's what makes it fun for us, actually.
And then if I were to imagine, so I imagine your typical client as a very high net worth individual with a few paintings, gorgeous blue chip paintings on their walls. But where does a gallery fit in to this? What is it you're saying? How do you pitch, Noah, how do you pitch to galleries that this works for them as well?
Well, it sort of, as I was saying at the outset, I mean, I think that there's an issue in the gallery universe where costs have continued to escalate. Pressures from bigger galleries have pushed down on medium or upper medium and medium, smaller galleries. And there is a general trend as you're trying to grow your program, whether it's originating young artists or bringing on estates or doing more in the secondary market, that you have needs that the general ability to sell work in your gallery and at art fairs hits a certain limit at some stage. And some galleries are well capitalized just by nature of them being owned by privately wealthy people. Some galleries have backers that nobody wants to talk about. And other galleries are trying to figure their way out while retaining their artist and doing what they do. And if you look at that as a business problem, like I believe that there's a place for an organization like Sotheby's, which is why I jumped across to the other side of the pond to really try to do something. Because again, we don't have to have another business relationship necessarily with a gallery. We can lend against their art. Because of how our business is set up, we can do that fluidly with no concerns. And on the the commercial side of the business, there's anything else to be concerned about, any more than you'd be concerned about anything else with any other third-party financial institution. So I think in terms of addressing the needs of operating capital, just to like put the lights on or open and expand, which is expensive, and then to help galleries grow through supporting their artists, there's a space that an organization like ours, like for sure, can operate, and a place we can do that really fluidly and well with a community of galleries that are all looking for these things. And it comes from the place, in addition, that a lot of galleries over the years have acquired things that, I think Jan was saying earlier, that are valuable.
Yeah, have gone up in value.
And they don't necessarily have ways to tap that through a relationship with a more conventional bank, because their other assets or cash flows maybe don't get to a certain point where you'd need to be a client of Citi's private banks. So.
But do you also say to your, presumably you have some clients who are big gallerists that I could probably name. Is it the same thing, being a top collector and being a top gallerist, that there's a bit of a blurred line?
Well, first I'd like to say that I think what you're doing is really filling a need that's been out there for a long time. And I think that you're going to be wildly successful.
Thanks, Suzanne. I hope so.
Excellent. You heard it here first.
And in answer to your question, we do do loans to some very top art dealers that have a net worth that meets our thresholds. And honestly, our credit people are looking at cash flow that comes other than the sale of art.
Yep.
And these people meet that criteria.
Wow.
And we've been doing this for 40 years. And some of the clients have been with us out of that 40 for about 20 or 30 years. And that goes.
And Jan, would that also include if you were a sort of a higher end dealer and needed a short loan, to buy something else? Do you do that?
Yeah.
Is that, how much of that is a proportion of what you do for dealers, I guess?
Well, I think it's still a relatively small portion. I think it's definitely an area of focus. I believe when it comes to galleries, it's about, honestly, also with private individuals, but it's about building a partnership. We work with galleries on so many different fronts. We work with them when it came to investments, so we co-invested together. We use, we buy from galleries on behalf of our clients. We do private sales and so forth. So there's a lot of interaction. So for me, it's just like with every business. It's about building the right, product for a particular gallery. It doesn't work for every gallery. I think it's about where the gallery is in terms of its lifespan. So in the beginning, as Noah said in the beginning, it's all about equity. People put their own money into the business, and it's very difficult to get a bank or other lender capital because you're still a young business. You are not necessarily making a lot of profits. As you're growing, suddenly, taking on some debt is actually very efficient and can be very helpful. So, as I said before, for me, there's room for almost every type of lender when you look at a gallery, and where I see our opportunities, especially around purchase financing and sort of people who are more active in the secondary market, who are making investments for, whether it's short term or longer term, where they can look at it sort of as a sort of subset of what they do, and they actually like to compartmentalize it. So they see listen, maybe I have a bank that sort of helps me with the overall inventory financing, and here I have few bigger investments that I have made that I would like to do with a partner that could be actually helpful, hopefully one day also to help me to potentially market the property. But I can see it sort of separately, and we can do it very efficiently, very quickly, very discreetly. So yes, but for me, it's you know, again, it's selective in a sense where it doesn't fit everybody. And I think, I want to do product that is sticky. I don't want to do a deal necessarily just for 6 months. I like to build, relationships that potentially last years.
Yes. But then so for a primary market gallery, essentially you're saying if you happen to have stock by an artist that may have shot up in value as we see happen, maybe think again about how you're financing yourself. Is that right? On the primary, it's...
I mean, effectively, and I think especially for galleries that have those artists that are so hotly in demand, I mean, they're the ones that are most apt to be subjugated, right, to like somebody else coming in and say, thank you, I'll take that. And so, if you've been fortunate enough and savvy enough over the years, if you've grown that artist's career with the gallery to buy back some of that inventory and get it priced to market, you have something that's worth something. And some people may be able to lend against that and others won't. We can. And, my working thesis and ours more broadly is like, we can be a good business partner for you in that journey.
And then what happens, you're a partner, but a partner with some power. What happens if you are a small gallery, and most galleries are small businesses, and it goes wrong? I mean, what happens when it goes wrong?
Well, I mean, if you can't pay back your loan, then we have to sell that art. I mean, that's, in our instance, that's the worst case scenario is that we sell that.
Are you the same?
Yeah.
Yeah.
I think, look, it's ultimately, that's the scenario that none of us want to end up in, especially as a specialist lender. I mean, I've done this for a number of years, and there were very few instances where you had to resort to that, and honestly, it was usually when the client, there was a full-blown bankruptcy of sorts. It wasn't sort of selective like that. And at the end of the day, I think what makes Suzanne, sort of very comfortable as a banker, despite all the numbers, all the analysis, all the cash flows, is the fact that people really care about the art. They'll sell their boat before they sell their painting sometimes. So I think in many ways that, it's sort of an anecdotal thing, but it actually does work in this market. And in those situations, when they do happen, they get very public. And, they're actually not happening that often, which is why you see also the level of default in the loans, Sotheby's or the banks or ours, is basically non-existent.
Is it? Okay. I thought it was just another number I couldn't find, but that's good. That's good to hear.
0.0 something.
Yeah, exactly. But is there? I mean, there have been some other specialist lenders, let's say, that aren't whose names I don't see anymore. Has this market needed a bit of professionalizing, and how has it shaken off this reputation of last resort?
Well, I think it's a very sexy market. We would say. I mean, clearly, it's for bankers who've been doing sort of everything and anything under the sun. Art is sort of the next barrier. So we've seen Suzanne's seen a lot of her colleagues from other banks coming in and out of this market. It was sort of it was a flavor of the month. While the managing director who was in support of it was in power, and then the minute he moved on, the thing sort of died out. So you have a few that sort of stalwarts that stayed in the industry, and the same thing in a boutique market. I mean, it's really, people find it relatively easy. As I said, there's very little losses, so it sounds like an amazing business, but it takes time. It took Sotheby's 270 years to get to the point where they got, and it just comes through hard work and valuations, and we built our business, the advisory business, for over 20 years. So those people, it takes time, and we didn't start lending until 6-7 years ago. So it was, and because you have to get a track record through evaluations. We do about $1 billion a year. Still very, not so much, but when you do it over 20 years, suddenly you have the in-house competence that you can rely on. And most of the specialist lenders that came to the market felt they were going to be, they were obviously very smart finance people, and felt, we can buy this expertise from somewhere else. We can just borrow it because it's there, and that, and we know the devil's in the detail. And even in an auction house or our team, as you said, like art is not something that you can see on a Bloomberg screen every day in the morning. You cannot see the price of a Picasso, and it takes, you have a team of people who have cumulative experience of hundreds of years. Sometimes, and even they can be wrong.
Yes.
So that's why we need a 50% on the dollar, because this market doesn't really play the same, it doesn't evolve in the same way as every other financial market. So we've seen them come and go, and I think you see when there's a new one, we tend to, Suzanne and I have done this sort of so many times.
Yeah, we work collaboratively for a long
so,
That's good.
so it's interesting to see, but at the same time, I think it's great when there is innovation coming to the marketplace, and I think we need sort of this new blood to come in and honestly keep us on our toes and make sure that we still providing the best service we can.
So I was going to ask about that actually. Thank you. Beautifully led me to my next question. But the technology must have made a difference to what you do. Is it making you, how has technology made a difference to what you do?
On our side, I think specifically, that the data obviously is permeating everything, and I think for us it comes down to obviously being as on top of our evaluations as possible. When it comes to processing of the loans and so forth, I think we are kind of very high touch business. So far, the technology I wouldn't say made that much of a difference.
People aren't applying for loans on an app.
Not yet.
Okay.
But I think, as we talked about sort of our minimums and where the market is going. So I think for me, where it's going is that you sort of bring down that minimum level down to $100,000, $150,000, $200,000 loans. And that's when the technology really comes in play, because you can't afford to have a staff and have that kind of a white glove service that we have today when we talk about millions of dollars. So, but I think that's really the future, and I think that's where you're going to see the apps and
so it's in the data. The more data you have, the more prices you have.
Yeah, but also the process itself, like it just will help you through it. But for now, it's all our clients, it's interesting because they always want to talk to the top person. It's very difficult to actually delegate sometimes because the clients love to talk to the top dog in some ways. So I think once you get to sort of a level of loans at sort of, as I said, hundreds of thousands of dollars, then you can sort of find a more efficient way of doing it.
You don't get a top dog, you get a bot. But presumably at Sotheby, you have data that other people don't see. Is there a Chinese wall between private sales department and you, or is that the point?
This is a little bit what I mean. So if we're originating a loan, whether it's with a high net worth confidential client or with a gallery, the material will go in. I don't even need to know what the material is, and we'll send it across to our specialist teams as a confidential client with A, B, and C inventory, and then they'll price it.
But you get a number.
Sorry, when we crunch a number out and give it back to the
Great.
client, and then that's the beginning of a more focused financial conversation around what we can actually lend at. What I will say is now that we're a full service business, doing a lot on the private sales side as well, that's just an additional data point that we have in terms of real-time information in terms of where an artist is trading, so to speak. In terms of what we can price, it's painting heavy, right? But we need the ability to sell it. And so we lend against auction estimate ranges, right? So we'll lend up to 60% on a low auction estimate.
Okay.
And that's what our team is trained to really price at. And that's what, it's like if we had to sell this at auction in the next calendar year, what's the minimum that we think we can reasonably achieve at auction? But there's intel that can get in there, especially if the artist is younger, has less secondary market trajectory to kind of input into that. And that's one of the areas that, having those other teams that are selling 365 now is super valuable actually, because that's in-house and we can bring that together quickly.
And then, Suzanne, if you're on the outside, you made an interesting point when we first spoke about this panel, that actually in some ways it's got harder. We think there's more prices out there because of OVRs, but actually in some ways your valuation, your job has got harder.
Right. What our benefit is that my team does both art lending, the valuations for art lending, but we're also a full-fledged art advisory service. So we're advising clients to build collections, really, not for investment really, but really we take a curatorial view of helping clients build meaningful collections for their homes and their families. So that gives us a lot of data points in the private market.
In the hidden world. Yeah.
Right. What has gotten, so anything kind of like 5 million and down we've got data points. Where it gets difficult is if someone sends you like a Rothko or a Kerry James Marshall that is the best of the best of the best, that is difficult because when you're valuing it, it's crazy conversations where your swings can be $5-10 million.
Yeah.
You know, I mean, it's insanity. And that's where it's, you know, it's a real challenge. And, you know, there are comparables we use, and there are a lot of facts and qualities that influence value. But it's also people's personal tastes that are valuing. So there's a subjective component that you've got to like figure out and capture.
Totally.
And we are in this sort of mad masterpiece market, which I suspect art lending is contributing to as well. But that might be a whole other panel. But do you just go conservative? You just have to go conservative, and your client might be a bit cross. But do you just go as conservatively as you
Well,
can?
you don't want to go too conservative and be on the other end of that phone call.
Yes, fair enough. Because they'll get a Jan. Who knows? Not saying you're not conservative, but
I mean, what we really try and do is get a fair market valuation and get as many comps as possible. But well, you've got all the data, so we.
Yeah, I mean, it's seeing this. I mean, both on the lending side, but just general business flow, being on the other side of the thing now. I mean, it's extraordinary, especially for a lot of younger art that's coming through. It just, you know, it's one thing if it's very tradable stuff.
Yes, or a Warhol.
That's like Warhol, basket, you name it. And then there's everything else, and you can get greatly varying opinions. They vary by specialists, they can vary by geography, they can vary by just like incidents that happened in the world in the last week. So it's, you know, it's a dynamic process, and in the end, it's just business risk. So.
Yes, no business decision.
Yeah, I mean, because we are independent, we sort of have the luxury almost to be able to get a Sotheby's valuation, Christie's valuation, Phillips, you know, independent, you know, the dealer that's managing the client. So we're lucky in a sense that we you know, don't have necessarily, you know, we have very rigid methodology, but how we get to our collateral value is not sort of a formula in a sense.
I see what you mean about high touch. I mean, there are these companies around that it's not quite WeBuyAnyCar.com, but it's kind of tell us your painting and we'll value it. Is that just an impossible? Yeah,
Yes.
It sounds like that's an impossible task. But can you see, dare I mention blockchain, but can you see an application, can you see a way where that blockchain might actually help you with some of these data, to fix some of these data points? Is that something you look at? You did a report, didn't you? You
Right,
just did a
yeah.
report.
I mean, I see, I mean, I'm an optimist, so in this optimistic blockchain where everything in it is perfect, I really think it could be incredibly helpful, because what happens is, you know, for not emerging contemporary, but for impressionist paintings, you're researching the provenance over and over and over again.
You're doing the same work.
The same work that someone else has done, and it's different eyes on it, but I think blockchain could be incredibly helpful there.
Do you agree?
I mean, definitely from our standpoint, I mean, it's only a plus. I would say you look at transparency is great. I think there have been companies trying to build a business though, and you see sort of the market still being a little resistant. You know? So, and a part of it is just uncertainty. I mean, there's a lot of talk about Web3, but the actual application of that, and so I still think it's sort of down the line. But, you know, I think there's applications both in terms of what Suzanne was sort of talking about in terms of security and, you know, recording all the information and be accessible and,
maybe
you know, cut down on the process and the due diligence. But I think there's also in terms of how we look at it as a financiers, how we actually fund these loans, there's another whole new world of how you actually raise money through blockchain. And I think that's going to sort of revolutionize not just the art lending, but just the banking market in many ways. I was at a conference in Miami and, you know, I thought it was all happening tomorrow. You know, these guys are really, you know, they're really thinking, you know, it's a very blue sky, but it's incredible. And I think, you know, the peer-to-peer lending in this something like this, which is very exciting for people, could be great for everybody. So.
And what do you say to people? So, no, if people don't like and have never liked really art plus finance, there's always been a tension between, and we have been talking for nearly an hour about art plus finance. How do you say to, you know, people who would think that this is just not for them?
Like, I get it, you know, but we're all running businesses, whatever those businesses are, and in the end, what's happened more and more is those, in some instances, those that didn't want to deal with the realities of that are the same ones that are bemoaning artists whose works are now trading for exorbitant amounts. And, the more one knuckles down and really focuses on, the P&L and the sort of business objectives of whatever your business is. And, there are clearly, in our world especially, there are objectives that go beyond the purely commercial and financial. And that's really important to know what those objectives are, but you have to put the lights on. And, everybody, in this room that's a gallerist or dealer at some level, begrudgingly or not, is selling things.
Yes.
And so being able to own that journey more on your own terms, I think is important and more important. And whether it's Web3 or other sort of blockchain technologies or all this other exciting stuff out there, there's a universe of tools that one has increasingly at your fingertips to support that journey. I think the more you own that, the better off you're going to be, and the better off in turn your artists are going to be, and the happier your clients will be. So that's how I see it, but it is a reality.
Yeah, there you go. Artists need to eat as a one. I mean, do you get that sometimes? Do people challenge you in the art world and say?
Yes, often. For me, I went to art school. I worked in museums. My team is basically comprised of people that worked in museums as curators. So we come to it really passionate about the art, and that's sustaining. And what fulfills us is our clients are really passionate. So maybe they're leveraging their collections to have liquidity to invest in other things or buy more art, but they love their collections. I went to a client's house the other day, and everyone has decorators, and it's all beautiful, and this happened to be salon, hung style, but one of the watercolors was off the wall, propped on a chair, and the catalog raisonné was opened up in front of it. So clearly the night before they'd been studying this watercolor. And that is like how collecting should be. And it's like, it fills my heart. So I feel like if art finance helps people collect more, and if younger collectors come in and see it as a tool to be able to get liquidity and keep collecting, and we build more collectors, it's a good thing.
That's a lot more warming than I was expecting this to go. I'm now going to completely smash that and ask each of you, Jan, have you or would you lend against an NFT? And if not, and why?
Not yet, but yes. I mean, I think actually what I was going to say,
yes.
if we were continuing with this, was sort of with I think that the world of NFTs and sort of this wave that we've seen over the last year, I think is so incredible for the art market because it's shown sort of attention on the art market that was considered by many. I mean, we always think of ourselves in the art market, we're very special. People on the outside don't understand us, and actually it's the other way around. Also from the other side. So lots of bankers don't touch the art market because they just don't understand it. And I think now with the NFTs, the conversation is impossible. I mean, you cannot ignore art anymore. And I think that's what's amazing, and that's what makes me enthusiastic about this marketplace going forward. So I think with regards to your question on NFTs, I think again, when the liquidity is sort of there, when the transparency in terms of it not being just immediate flips, gets into the market, and we have more than 6-7 months, under the belt. I think that's, it will certainly get there. We recently hired somebody for the first time, to invest in the advisory side of the NFT and sort of trying to understand it ourselves. And the first step is really the valuation. Without a valuation, we can't do any of this. So I think we're all kind of going through this education process internally now, and seeing what's blue chip from what I call the crypto NFTs, and what's the sort of the crossover artists that are coming from our traditional area, which we understand better, and where can we get comfortable, where can we add value in this marketplace? Because so far the art market was sort of left behind, except obviously Sotheby's with the auctions not. But on the advisory side, still people not really touching as much. So for me, the valuation is the first thing because that's what starts the discussion on our end. And if we can start getting comfortable with that, then we can start talking about lending. At the same time, I think a lot of the barriers that exist on lending against traditional physical art are not there for the NFTs. So a lot of when you think about the blockchain and security and and title and all of these things that keep us awake at night, suddenly with the NFT, if it's constructed and secure, suddenly you don't have to worry about that. So maybe you worry about the valuation, and that takes time, but you eliminate a lot of the other risks that exist for the physical art. So I'm kind of actually very optimistic, but it will take some time.
I've got a panel of optimists. This is great. I'm now going to open it up to any, oh my goodness, there's already a question. This lady in the front, sorry, I can barely see you. Hi.
Thank you to each of the panelists. I understand that we're talking gallery specific, and that would probably be the primary focus of the panels and the question. But I'm curious about the point of entry for artists, because many of us are looking to our galleries, which is why they're looking to you for financing when we want to do more ambitious projects, when we have a project that requires a lot more funding than the institution has. I'm wondering, is there any infrastructure for an artist to be able to borrow against their own collection? Because many of us are literally holding on to the same potentially
do you
value.
mean your own works?
Yes, because for instance, an artist will have several works in storage at our gallery, and perhaps, if I'm understanding things correctly, that's part of what the gallery, in looking after a loan, would be borrowing against. They might be borrowing against art. They may or may not be. But I'm wondering, truthfully, like, is there anything? What's the point of entry for artists to be able to actually borrow against their own collections? Yeah, that's the primary question.
Yes, I did. I think. Well, my guess would be you could only the artist could.
I don't think
And
we're
then
doing
just the last
Yeah.
the last point to that, and then as you answer it, what would be the primary differences between the European lending practices and the U.S. American lending practices with regard to that?
Yeah.
Do you want to go first, Noah?
Sure.
Yeah.
I mean, as an artist, you could work with us as any other private client would effectively, as long as you own that inventory and have clear title to it. In terms of gallery conversations, it's an important point you raise, because whereas a lot of galleries have work on consignment from artists that they represent, or on a secondary basis from collectors that they do business with who are consigning to them, like, we can't lend against that because that's not own inventory that the gallery has. So when our conversations with galleries are occurring, or with any client, it's really about having clear title and ownership of that. So an artist would be as germane as any other potential client. Generally speaking, as Suzanne and Jan pointed out, we have less. It's easier to do a lot of this business in the U.S. It's pretty easy in the UK and a few other places, and we're growing our capacities in more and more countries around the world to do more of that business. Does that make sense?
Thank you. Thanks. Are there any other? Oh, there's a question halfway. Well, no, a third of the way up on the left. Thank you.
First of all, I want to say thank you to all the panelists for such an interesting discussion. Suzanne especially, I was charmed by your description of your start in the industry, having myself had my start in art finance, barely understanding the concept of an interest rate when I began. I very much relate to your story. And in my time in that industry, however brief, for me it was always interesting, the interaction between that space and the dealers, simply because there were many challenges that I'm hoping Noah and perhaps Jan can speak to. I mean, it begs the question, when a dealer approaches you for financing, why is it that this is inventory that they could not themselves sell? That's, I suppose, one point. In addition to, from my understanding, from the perspective of a private lender, the relatively high interest rates. So in general, I'm just curious to hear maybe a couple of specific case studies, maybe obviously without naming names, as to how the dealer market interacts with your type of business.
I mean, if I could start from the private banking side, when we do it, and it's very, very select, because our risk managers get nervous about dealers, to be completely honest, because they're looking at Well, might as well be honest. They're looking at the valuation of the art, and then they're looking at the client's, or the dealer's financial picture. And in their minds, they're saying, well, if the art market adjusts downward, everything's going down. Now, I will counter to them and say, well, you can say that about a lot of businesses, but the art one's harder to argue because there's less data. So when we do lend to dealers, we're looking at the collection that they own personally, that is not gallery inventory, and is actually very rarely even in the gallery. So it's usually what's in their homes, and that's how we do it.
So it's not something they would even want to sell,
No.
to that point about why
Every now
can't
and
they do it
then
themselves?
do, but we can allow substitutions, but it's really what's in their dining room, what's in their living room.
Jan, maybe.
Yeah, I think, obviously the question was around some of the horror stories that happen in the art market over the years. And again, I wouldn't judge the market, or the dealer sort of segment because of a few bad apples. I mean, obviously, part of why I think we all successful in this business is because of the experience that we have gained over the years. Not just us, my colleagues who are lawyers, who've gone through a lot of the lawsuits, the compliance people, the art people who understand where the painting might have come from originally. So a lot of the information is kept from the wider market because of the experience and the staff that we have. We have definitely a lot better information than most people about that. So I think as Susan said, I think from a valuation standpoint, I'm not so concerned. I think at the levels where we lend at and the way we look at the values, I'm not concerned that somehow tomorrow this stuff is not going to be worth enough to cover the loan. The real issue with the dealer segment was really more around title, and I think that's been elusive because dealers take things on consignments, they invest themselves, there's a primary aspect of it. So again, it's just a matter of understanding who your client is. So, and I think part of it is building those relationships. Sometimes you start slower and you open it up and you kind of build it up. And I had some incredibly successful relationships I've built over the years with dealers, and they trust you, and you can execute on a few days' notice. And again, somebody new comes in, we'll look at it and we'll be a little more careful, and we'll start sort of different amounts, different advance rates. But again, I think I see that it's all of our sort of cumulative sort of role to inject some of the liquidity into the marketplace that's going to be helping everybody. So I think it's, so I'm a fan of the dealer market, and I think it's, despite some of these, bad stories that surprise all of us sometimes, it's, we have learned through all those horrible situations.
Lindsay Pollock's 350%, I keep saying.
Exactly, the Larry Sounder is it's a name we can mention, but exactly. I went through the bankruptcy of Larry Sounder, and we collected every single cent that he owed us. So again, it's about how you do it at the end of the day. And you need to stay on your toes, and you can never sort of fall asleep behind a wheel in many ways.
And to the point about why can't a dealer sell it themselves? Is it sometimes maybe they don't want to flood a market?
Yeah, or it's a long it's a hold, right? I mean, so
right.
Part of the idea is that there's something that is valuable that you don't want to sell tomorrow.
Yes.
And so you're trying to extract a cash flow from it to do other things.
And
I think that's the easiest in the ideal case, because in our case, it may not be on the gallery owner's, kitchen or bedroom wall, but if it's sitting in inventory and storage somewhere, then it's easy, and that's their long-term play anyway. This is just a tool to unlock that.
Great, thank you. Are there any other? Oh, yes. Oh, Farah, hi.
Yeah, hi. I'm Farah again from the New York Times. I just, there's a question that you have been asking yourselves, that everyone has been asking themselves. Melanie asks herself, people like me, and maybe for decades and centuries more, people will ask themselves, how do you value a work of art? Because it's not a share of Coca-Cola, it's not a piece of a building, it's not, it is a tangible object, but it's just a little paint on a canvas. I mean, how much is that ultimately worth? So there is so much that goes into valuing a work of art, and I was wondering, you are squaring the circle all the time. And you also mentioned that there's precious little data, right? A lot of the market is opaque. There's a surge in private sales, et cetera, et cetera. And so do you think that in the future, as we go forward, you will be able to value art better and more, that there will be more tools to value it? Because right now it's still, how much is a Mozart concerto? Do you know what I mean?
Thank you. You don't think it's going to get better?
I think it's years and years of expertise, and it's years and years of people looking at art and being able to assess quality and value, and the quality, and then understanding the provenance. And we do it as a team, so we'll have like 2 or 3 advisors start the valuation process on their own, and we're using ArtNet, and and we talk to people all the time. Like our clients who are collectors, like, oh, you always come in like you want to chat, but I can tell you're just trying to get pricing information. I was like, yeah, we are. But, and then we meet and we discuss it. And it's, we're valuing actually a Basquiat right now, and we're having a hell of a time, I'll be honest.
Why? Why? Tell me.
Because,
You're getting quoted.
It's my job.
oh yeah, I don't want to be quoted. Because,
Yeah.
there's a sale at Phillips, right, that we need to wait for. There are the comps out there. In this case, it's actually easier because we were doing it from a JPEG. And I saw it this morning, so now it's crystal clear to me. So seeing it in person really does the trick.
But also, again, that's an artist who, he has been very much a part of the masterpiece market.
Right,
so I
correct.
assume that's part of the challenge,
Right,
is how high can it go, but how high might it not go?
Exactly, yeah. We think about all of this all the time. We have a pretty large portfolio, like art lending portfolio, and within it, you find that the top, we have to do all the stress analysis of it all the time and look at where it is globally. And the top 10 artists in it, year over year, don't change that much. They might change places, but it doesn't change that much. So the comps and the data that you have for those top 10 or top 25, we're looking at all the time. And I think that's the other part, is just constantly looking.
But, I still don't understand why it was hard to value that Basquiat for you.
Well, in this case, because I hadn't seen it. Yeah, the JPEG was terrible.
I will take, that's where technology isn't helping. I will take one more question if there is one. Oh, you can see higher than me. Yes, wherever that is. Thank you. Thank you. I can see you, thanks.
I'll talk loudly.
No, we're here.
No, I'm sorry.
There you go.
Suzanne, you mentioned, hi.
Hey, Mary.
You mentioned the top 10 artists, and I was wondering, I'm very curious who they are, and if they're all male. Or
they are not all male.
Yay! And I was wondering how women artists have penetrated, or valuing the work of women artists, or your clients lending women artists. Is it still, let's say, 80% male artists and 20% women, or has there also been advances in the financial valuation of women artists?
So, I represent the clients we work with, but I'm really happy to say that we are seeing a trend, actually, like globally, of men collecting women artists, and so we're seeing more and more masterpiece works by women artists, coming, that we're looking at. So, it feels pretty good. I think we've. Yeah, I think there's definitely a growing trend. And to be honest, people are seeing value, right? There's the prices are still relatively low compared to the men. And if you are a collector with a great eye, you're seeing that. And so, yeah, we're seeing a lot more women.
Thank you. Thank you all for brilliant questions, and thank you, Noah, Suzanne, Jan, for making a very difficult subject fun. That was interesting.
Anytime.
Thank you.
Thank you so much. Thank you so much, Melanie. Thank you, Noah.